if I want to send $1 million from me to you without a bank, Satoshi solved that. But inadvertently, when Satoshi solved that problem, Satoshi figured out not just how to send $1 million from New York to Tokyo without an intermediary, but how to send $1 million forward in time 30 years without an intermediary. If you can transfer something without an intermediary, then you can store something without an intermediary. So the killer app of Bitcoin is the store of value in cyberspace.
Bitcoin is transforming the financial world by giving individuals greater control over their asset. As a decentralized, transparent digital currency, it offers security, innovation, and financial independence in ways traditional financial systems can't match. This shift has captured the attention of industry leaders like Michael Saylor, executive chairman of MicroStrategy, who recently discussed Bitcoin's role in redefining our economic future with Trish Regan, co-founder of 76 Research. In their conversation, Saylor explored Bitcoin's potential as a reliable store of value, emphasizing its well-designed system and sharing projections from his Bitcoin 24 model. He highlighted how Satoshi Nakamoto's solution to the double spending problem enables trusted, intermediary-free transactions, positioning Bitcoin as a powerful cyber store of wealth. With around $450 trillion in global long-term capital investments, Saylor noted that Bitcoin offers a compelling alternative, especially for those looking for digital assets when traditional investment options are limited. Saylor also stressed Bitcoin's credibility, citing its recognition by the IRS, approval from the SEC, and adoption by publicly traded companies. Its long-standing classification as a commodity further strengthens its position. For more insights from Saylor's perspective, let's watch key moments from his interview. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
So first of all, what Satoshi discovered was how I send something of value between two different individuals without a trusted intermediary. So that's known as solving the double spend problem. But if I want to send $1 million from me to you without a bank, Satoshi solved that. But inadvertently, when Satoshi solved that problem, Satoshi figured out not just how to send $1 million from New York to Tokyo without an intermediary, but how to send $1 million forward in time 30 years without an intermediary. If you can transfer something without an intermediary, then you can store something without an intermediary. So the killer app of Bitcoin is the store of value in cyberspace. And what's that worth? There's about $900 trillion worth of wealth in the world, and about half of it is used for its utility value. People buy assets for their utility. They buy houses and buildings and boats and planes and pieces of art because they want to use them, look at them. But the other half of that wealth is assets that are purchased as a long-term capital investment or as a store of value. So $450 trillion of the world is long-term capital. And so if I take you and I drop you in Africa and I say, here, take $100 million, buy anything you want anywhere in Africa, but you got to keep it for 30 years. And, then I say, or you could have the same $100 million invested in the U.S. Most people would say, well, that's a no-brainer. I'm going to keep the money in the U.S. There's nothing I want in Africa that's as valuable as property in the U.S. But what if you can't have property in the U.S.? Then what if your choice is I can have $100 million worth of Bitcoin in cyberspace? I can have $100 million worth of digital property, or I can have $100 million worth of land in any country in Africa, or any building or any company or any bond or any currency in Africa. And the answer, when you think about it, is there's nothing you want in Africa that's better than having digital property in cyberspace. And there's certainly no place where you're going to trust your money or your assets for 30 years, much less 100 years, much less 1,000 years. So when you start to ask the question, where do the 8 billion people on the planet and where do the 300 million corporations on the planet, where are they going to store their capital if they don't have recourse to the United States and, property on the Upper East Side, the conclusion you come to is I'm going to put my money in cyberspace. And so Bitcoin's real use is it's digital property in cyberspace. It is cyber Manhattan. It is a place where you can store your capital and give it to your great grandchildren. And you know that you're not going to be taking risk against a bank as a counterparty or another company or country or currency or culture. So after 16 years, it has been copied 10,000 times. They all failed. It's the winner, right? It's the network that all the smart, rich people in the world chose. It's the bank in cyberspace. If you show up in a city and there's 10,000 banks and you have a bunch of money, and the question is, which bank should you put your money in? You go find every smart, rich person that you know in the city and you say, hey, where do you put your money? And if they all put their money in one bank, you're probably not going to put your money in a bank that's a million times smaller than them that only has poor, stupid people. So it was copied. It's the winner. It is the bank that's of choice of the smart money in the world. And will it be banned? You couldn't know that for 15 years, but the IRS legitimized it as property in 2014. The SEC approved a host of Bitcoin ETFs in January of 2024. Today, it's held by nearly 100 publicly traded companies. Every major regulator has certified it as a commodity, not a security. That was a judgment by the former head of the SEC under Trump, and that's the judgment of the current head of the SEC, Gary Gensler. So it's not getting banned.
Michael Saylor describes Bitcoin as the epitome of sound money, enabled by breakthroughs in cryptography, the internet, and hashing algorithms. While earlier projects like Hashcash and BitGold faced challenges, Bitcoin succeeded by learning from their misstep. Saylor highlighted Bitcoin's decentralized network, absolute scarcity, and consistent operational frequency. Initially, Bitcoin's value was uncertain. Famously, in May 2010, it was traded at 10,000 BTC for 2 pizzas. Saylor's Bitcoin 24 model, which is accessible on GitHub, projects macroeconomic shifts over the next 21 years. He forecasts significant growth for Bitcoin, driven by a 7% annual increase in the US dollar supply and innovation. Saylor anticipates Bitcoin's value rising from $65,000 to $13 million per coin, ultimately comprising around 7% of global assets, and outperforming the S&P index. His model allows users to adjust variables to make informed predictions and insight. For more of Saylor's perspectives, let's return to clips from his recent discussion.
And so Bitcoin represents the engineering of perfectly sound money. And it was only possible once those 3 technologies advanced. And there was a group of cypherpunks that were playing with cryptography, playing with the internet. And they saw the development of hashing algorithms like SHA-256 and the ability to build that into an application-specific semiconductor. And they probably tried this 40 times. There were products like Hashcash and Digital Gold and BitGold and things like that. And the first 30 or 40 of them failed. And then after about 40, some Bitcoin came along, and Bitcoin learned from the failures of the 40 before it. And it was the first truly decentralized crypto monetary network. And it was lucky because it just had the right monetary policy, which is absolute scarcity, 21 million. And it had the right frequency, a block every 10 minutes, the right bandwidth, the right protocols. And, when it was launched in January 3rd of 2009, did we know it was perfect? No, nobody knew it was perfect. In fact, it didn't trade for a year and a half almost. And the first time it was used for transactions was Pizza Day around May of 2010, where somebody bought 2 pizzas with 10,000 Bitcoin. So at that point, 10,000 Bitcoin, $700 million worth of Bitcoin was traded for 2 pizzas.
Yeah.
And then people thought, well, maybe it's something, but it's still kind of a hobby. And it took another decade before it wasn't a hobby.
Well, and
hence
you also had
a crypto
people,
network comes to life. We created a model which we uploaded to GitHub. It's in the open source community. It's called Bitcoin 24. You can just Google it and go grab it. It's an Excel spreadsheet, and it has macroeconomic models for the next 21 years, a Bitcoin forecast for 21 years, and then micro models for corporations and individuals and institutions and even nation states. And once you download that model, you can plug in your own assumptions about what you think is going to happen, and you can come to your own conclusions. But my assumptions are the US dollar supply is going to continue to expand about 7% a year. And that is the historic rate of expansion of dollars for the past 100 years. That's how I arrive at that. That's just how fast the money supply is expanding if you look at M2. And I think that there'll be innovation from AI. So some things like equities will probably grow a little bit faster because AI is going to have a boost to equities. I think over time, gradually, technology is going to demonetize gold and some of the other stores of value assets that were used in the 20th and the 19th century. By the 21st century, we're going to digitally transform property and transform gold into digital property, digital gold. Okay. And when you look at Bitcoin's growth over the past 15 years, it's been growing more than 100% a year for the first decade or so. And for the last 4 years, it's been appreciating about 50% a year in ARR. I think it's 50% a year in ARR, and it's 50 vol, which is like 3 times the volatility of the S&P and 3 times the performance of the S&P index. Okay. Over the next 21 years, I think it will grow faster than the S&P, and it's going to grow to the point where it's about 7% of the world's assets. Right now, it's about 0.1% of the world's assets. And I think that it will gradually approach, but it will never be as big as the S&P index or equities. It won't ever be as big as real estate. But in that world where it decelerates from 50% down to 20%-ish, it will appreciate from 65 or 70,000 up to 13 million a coin in my base case.
Bitcoin's price has climbed amid rising geopolitical and economic tensions, particularly with the upcoming U.S. election. From October 27th to 28th, Bitcoin saw a 3.2% increase, briefly testing the $71,500 mark. Many investors believe current conditions may favor Bitcoin's long-term growth, as sociopolitical and economic events continue to unfold. For instance, despite a 5.5% drop in oil prices following reported attacks by Israel on Iran, energy output remained stable, diverting market attention to regional uncertainties. These conditions, along with inflationary pressures, have led some traditional investors to consider alternative assets like Bitcoin. Upcoming U.S. inflation data and the Federal Open Market Committee meeting in early November could further shape investor sentiment and policy decisions, with a forecasted 0.3% rise in the core personal consumption expenditure index. As the U.S. presidential election approaches, investor caution grows, with many favoring cash and short-term government bonds. Historically, elections introduce market unpredictability, and many hope reduced uncertainty afterward could benefit risk-on assets like Bitcoin. A potential Kamala Harris win may also bring clearer crypto regulations, though the immediate effect on digital assets is uncertain. Bitcoin's predictable monetary policy has continued to attract attention as inflation remains a concern, suggesting early 2025 could be a promising period for price increases. What are your thoughts on potential risks Michael Saylor's optimistic Bitcoin forecast might overlook? Could these impact Bitcoin's long-term adoption and stability? Please share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.